Hi everybody, it's Victor here again from Trend Following Trading for Beginners. And in today's episode, I want to talk about the pitfalls of trading with scarce money. Coming up next. Today I want to talk about scarce money. What is scarce money? Basically, when you trading, you obviously have to have a capital, and generally traders call this risk capital. But for a lot of new traders, because of their dreams of making money quickly and something like basically don't do any work and then just dream of big returns, and also because of greed, people put money up in an account that they cannot actually afford to lose, and that is what we call scarce money. Basically, in the terms that the money, let's say you have £1,000 is for your rental next month, for your rental payment, for your house, your car, whatever it is, and you use that to try to make some money out of the market, or gambling, or whatever it is, and we put it in the market and hoping to make some money on a couple of trade, and then you tell yourself, okay, just have a little flutter, and you fall into basically a trap, because that messes up your mind a lot, because that money, which you definitely need to pay your rent, in this example, if you lose the money, even lose 10% or 20%, you will get frustrated. You will get scared and worried that how you're going to make your rental payment next month, and you will start to make bad decisions in trading, and very quickly you will lead that into a revenge trade, and you will even affect your mental state, and you won't follow your systems, and from there on just going downhill and again and again. And I have suffered that at the start of my trading journey, definitely. I believe, from as far as I understand, talk to different traders, especially new beginner traders, some of that, I think most of that have that problem, because they came with the mindset of doing trading as playing the lottery. In UK you pay, I don't know, the lottery is two quid, and you have a chance to making millions. Okay, the statistics of a win is like 1 to 10 million or something huge, but because it's just a chance to make some money out of nothing. Everybody can bet 1 quid, or 2 quid, and you don't really worry much about it. And that is sort of the gambling mindset that you bring in. But okay, might be gambling as is a sense of a lottery, but that's thinking of, okay, it's only my small amount of money in my pocket, 2 quid to buy a lottery ticket, and you're willing to risk it irrespective of the outcome. And if you if you're buying a lottery ticket and you actually win something, you'll be happy about it. The more the merrier. But that is the gambling mindset is wrong for bring that into trading. However, it's exactly the same thing you need to think of when you put that money on the line. So that £2 that you spend on buying a lottery ticket, you should have that same carefree thinking when you go to put down on your trading account. Okay, your £1,000 is not something that you can just lose it. It's still quite a bit of money. But if you have actually need that for pay your car payment, your credit card payment, your rental payment, your food bills and stuff, those are the type of things that you should not touch. Those are the type of money that you shouldn't risk on trading. What you actually need to do is to basically save up. And I would say, let's say £1,000, you only, maybe trade £100 or something small portion of that you can risk it. So if you lose your £100 in your trade, and you still got £100, and so long as you can cover your rent, whatever the expenses that £1,000 is supposed to be for, you will not be too worried, and you can have a better, clear mind to trade, and that is a much better mental state. So for me, the money that I put up took me a long time on my trading took me a long time to save up. But I initially started off with only 1,000 quid doing spread betting, but I only trade couple of indexes, and that's about it. until I build the account up to the 10,000, 20,000 over months and months, couple of years to build that up. I sort of like trade very, very small, and basically I understand how much I should risk. And so basically the first time when I have £1,000, I only risk 1 or 2%, so 10 or 20 quid or something, and I play the FTSE 100. Basically it's because it's easy to get in, and it's quite cheap. The margin call is low, and also the spread betting firm that I use allow only bet 10p a point, and also for some of the forex as well. So British pound against US dollar, or British pound against the Japanese yen. That's how I first started, but I only keep very small amount of trade, and keep on watching and trade it slowly and learning the process, and that I find is very helpful for me. And the problem if you have scarce money and you basically muck around and you lose money, for example, because at the start you don't know anything, you just hopping on different systems or listen to people's tips and stuff, and you lose that money, you will be thumping yourself, and you will not have a clear mind to think, or even if you have a system, if you don't have a right mindset, have a cool mind, you will not follow the system. So this is a couple of things that you need to think of. So let's go logically think about what type of thing trading with scarce money can actually harm you with. First of all, obviously, it's still emotional effect on you, emotional control, because obviously you have 1,000 quid and you lost £500, and that's £1,000 your rent money. You get really scared, and you jump up and down, try to find the 500 quid I just lost to make up that the losses so that I can pay the rent next month. And then you emotionally you messed up, and you trade in that state, you will inevitably fall into what we call eventuate. You will try to jump into trading when there's actually no signal, because your system, for example, didn't give you signal, but because you want to make your money back very quickly, you basically force trade, and that's definitely no to do, but what we call eventuate. And the market don't owe you anything. It might not necessarily give you money, trade that actually produce money. You might be lucky, get some money back. But then because you didn't follow a set of rules, and you do it, just scan in and eventually got lucky and got your money back, next time when you have similar situation, you again repeat your mistake, and the market might not be so lucky at the time and give you back your money, and you just keep on losing it and just continue losing. So first of all, trading with scare money really mess up your mind, because you cannot think logically, and that is no good at all. Secondly, also if you trade with scarce money, we have something called portfolio heat. So when you have, let's say, using my sample trade portfolio, basically there's like 10 or 15 instruments there, but not everybody can take all of that to trade in one go, because some depends on your risk tolerance and stuff, and you might not be able to handle the losses. Inevitably there will be some losses, and you feel the heat of the losses, and we call this portfolio heat, so to speak. And you might get scared, and when you get scared, because it scares money, and plus you get scared, you worry about losing money, and you basically, if you're on a winning trade, which you don't know anyway, you cut your winning very quickly. You basically say, okay, on this trade I might make 50 quid, let's take the money and put it in your pocket. Unbeknown to you, there's probably a chance that that trade you just terminated might go to the moon. You basically solidified your 50 quid profit. And then when you actually see the trade that you just terminated and put the money in your bank actually went further and go in your favor, if you haven't taken a trade out, you might have made 100 quid, 200 quid, or 300 quid, or 1,000 quid. You'll be thumping yourself emotionally. And all because you were trading with scarce money, because you're scared of losing your money. And the market actually reflect that back to you. What you're scared of, the market give it to you. You're scared of losing money, you lose money. Lose money by what? Losing the actual money you left on the table. So instead of you can take, let's say, £300, if you have left your trade run, you took 50 quid instead. So you left 250 quid on the table. And effectively, you limit your winning size, which in trend following term is a big no-no, because we want the big winners to cover all the small losses inevitably that we do trend following system generate. My system only have about 35% win rates, but the losses are very small. They're 1%, but the winnings, they varies from break even 1%, 5%, or 10 times, or 5 times. It really depends. And some it takes a long time as well. Some sort of take months instead of a couple of days or a couple of hours. And because I use end of day trade data, most of my trade, the good one, takes weeks and months. And that's just the nature of trend following. Now, those biggies, if you chop those off quickly, let's say you take 100 quid out of the market, and those markets just run and give you 1,000, 2,000 pounds, and you will kick yourself. And that's all. Like I said, because you're trading scarce money, you worry so much. You just want to see the money on the floor. You just want to take in. That's it. But it's precisely the reverse. You need to let the trade run. If it's run in your favor, continue. So long as you cut your losses, let your winning runs, you make money. But scarce money definitely put a stop to that, or make it difficult for you. And I think the other thing is also people forget. In general, you are let's say you are initially, before you start trading, you think you can lose 1% of your trading account comfortably. But then when you're actually trading from a new real account, you find yourself losing 100 quid. For some people, could be a lot of money. And then you basically feel, I lost 100 quid now. Like I said before, you try to get Eventuate and stuff. And the way to get around that is also to basically reduce the amounts that you have to risk. Instead of risk 1%, risk 0.5%. Because all of us have a bias to overestimate our ability, overestimate our risk tolerance, overestimate our pain point, be it physical or emotional or financial. And the trick of the trade here is for making money long term, you really want to keep your trading capital, your risk capital intact as much as you can. So you risk as little as you can. But you trade scarce money, that tactic's gone out the window because you cannot afford to even lose $1 or £1. And that's no good at all. Trading is a probability game. You win some, you lose some. If you're not comfortable handling losses, then I can tell you have no way in hell that you make any money from the market. So that's another problem. And for me, I think in most of it, the other thing I want to talk about is when you actually have a winning trade, the big winners, how you take advantage of the big winners is, first of all, don't worry about your the profit that's in your account at a time, because until you close the trade, that money is not yours. That money is the markets, the bankers. And if you trade scarce money, like I said before, you cut losses very quickly. You take your profit very quickly. You also forget one thing: to make big money, you need pyramiding. And when you let your system run, instead of taking one trade, or let's say British pounds against the Japanese yen, which I've done recently in April, it runs for like 4 months. And I pyramid up. So basically, up to when the trade move in favor, up to a certain level, I basically add some more. And when you move further in my favor again, I add some more up to 5 lots of trades. and that makes all the difference. And you trade with scarce money. Every time when you see the trade going up and down, in favor and out of your favor, against you, whatever, you will not let that run. You will not let that trade run. And also, your pyramiding, basically the effect of winning and losing, amplifies. And so long as your trading system is saying you should still stay in the market, you should continue to trade. But if you trade with scarce money, you might not have the necessary mindset or to hold on to yourself to not let the let the trade run. And you may basically scare and say, okay, I make some money here and just cut short, and basically you basically left more money on the table again. So that's another pitfall of trading with scarce money. So for me, effective, I think the overall is the way to attack this scarce money mentality is, first of all, the money you risk for trading, either in forex or shares or commodity index, whatever it is you're trading with. You must have a mindset that you're okay to lose them all. So if you got a £10,000 account, you need to remember that £10,000 is not all your money. Your £10,000 is maybe, is only a subset of your actual overall capital. For example, you have £50,000 or £100,000 in the bank somewhere, and you only risk £10,000 doing trading and stuff. So if you lose your £10,000, you get upset like everybody else, but you will not be so worried that you cannot make the next rent payment or your children's college fee for next year. Okay, so that for me is very important to have a basically very cool mentality. Those money that you risk, you're okay to to actually lose it if you have to. And you have to be okay with that. A lot of people are not okay with it at all. All they think of is making the money, how much they can make, and think of the good time, thinking of lying on the beach, drinking their favorite drink, and eating the best food they dream of, and that's it. And all they think of is the best of time, the good point, the good thing. They forgot the bad stuff. And if you trade scarce money, all your mind is worried. In the back of your mind is worried about, how am I going to make them? I must make this trade work. I must make this trade work. If it doesn't, then I lose, and I might, emotionally not just losing money. Some people might not even handle it, or lose too much. And sorry to say it, but there are people who lose a lot of money in gambling and jump out a window and die. Especially in Asia. So those are the things that make you do stupid things afterwards. So I'll say it, be careful of scarce money when you trade. Please, and please, and please again, don't trade with scarce money. You make sure that you're okay with lose that money. If it's £1,000, that's your maximum pain point, fine. Play with £1,000 account. And then when you grow that, okay, take some money off the table, maybe put it in a bank and save it, and something like that. But until you are happy to lose whatever you have in a trading account, all of it, which might happen, which could happen when you, especially when you're a newbie in trading, you might blow up a few accounts. You need to be sure that you're okay to lose that and have the mentality able to withstand that. And otherwise, I suggest you don't risk that money. Don't trade. Keep in your piggy bank. Get something nice for your family. Get something nice for yourself rather than lose it. So this is my 2 cents worth of pitfall of trading with scared money. I hope you like this episode, and I speak to you soon. Bye.